have a new update on Palantir after its meteoric rise of over 20% in the last week. Prior to this week, I made a monumental video saying this. It's 20 seconds and I need you to listen to it before I go into my new perspective and following up on Palantir stock and what I'm doing. I have $250,000 in Palantir and I'm about to buy some more shares right now. Palantir is thriving despite recession fears, tariff issues for two main reasons. One is government contracts, and they just landed a contract with NATO for adoption of military AI through their Maven system. Second reason Palantir is thriving is because of commercial success and Citi's 10x transaction volume using Foundry. Now I want to expand on these two reasons of why I'm so bullish on Palantir stock. We're going to jump into my portfolio right now, and I want to show you the different strategies that I'm going to be using on Palantir, why I still think this is one of the best opportunities to purchase this stock, and why right now is actually super critical because there's 8 days left. And in 8 days, we get something that is absolutely bonkers for stocks, which is earnings. Once earnings hits, the market completely pivots. It either continues to drive up or it pivots and goes down. I think Palantir is going to see a further explosion in its stock price because we're about to get some really hot news. Now, I personally like the company, and I also admire the CEO, Alex Karp, for his blunt language and his brutal honesty. It's the CEO who drives the company, and Alex Karp has often said that the retail crowd understands Palantir better than Wall Street. That's pretty wild, right? That means me and you understand better than Wall Street professionals. At the same time, I'm not really surprised, and I want to help you understand why I'm investing new capital into Palantir and why I think this is the best opportunity for 2025. So I made fat stacks of cash this week on Palantir, and Palantir is specifically recognized as a leader in machine learning and artificial intelligence platforms. This is actually what I studied back in college. I studied finance, economics, and business analytics, and basically how the new economy functions. It's all about data. Like if you don't have data, you are left behind like a dinosaur. With data, you make much better predictions, you make better business decisions, and Palantir develops software that helps businesses integrate and analyze complex data. The company says its key differentiator is an ontology-based software architecture. An ontology is a framework that links digital data to real-world objects to define nuanced relationships. Users can query ontology data to surface insights and drive decision-making that improves over time. Every single day. More data equals more insight. More insight equals more money. This is exactly what companies want. In 2023, by the way, Palantir, that's when they launched artificial intelligence and AI, the platform called AIP, adding support for natural language processing to its core software, Gotham and Foundry. Now, AIP lets users engage those products conversationally. So Forrester Research has since recognized Palantir as a leader in machine learning and artificial intelligence platforms. And specifically, the way they are leading their projects is very different. When they started off, they were not founded as a SaaS company. Alex Karp didn't come in and he was like, I want to make a lot of money with SaaS. No, he came in as, I'm going to fix and solve real world problems. And he built essentially Palantir, the company. What they did was they built custom-built deep analytics platform originally designed for counterterrorism after 9/11. Now, they weren't just making apps. They were building operating systems for data, like Gotham, for the government. They started by solving insane, complex, high-stakes problems, terrorism, battlefield intelligence, and that demanded perfect data fusion, privacy protection, and speed. And this is the DNA that's carried into everything that they built later on for commercial use. And I am super bullish on the commercial use. Okay, you need to understand this. For years, Palantir's revenue was mostly government. All right, they mostly had government revenue, 60 or 70% approximately. But recent quarters have shown commercial revenue growing faster than government revenue, especially U.S. commercial. It's compounding at 40 to 50% per year right now. Before most investors fully value Palantir as a commercial-first company. I talk about risk management and a lot of my, free courses here on YouTube. If you go to the playlist, you'll see some free courses. I talk about management, but essentially you should be selling puts with all that you got on Palantir, because Palantir, if you buy it for the right price, is the best investment that you can make for 2025. Now, rather than buying Palantir for the current level, nobody knows if a stock is a best purchase at the current price. It is difficult to say, but what's much easier to say, Palantir is at 112. I want to buy it for $100. and it's currently 112. What does that look like? I'll show you. And essentially, what I am going to do is instead of buying it for 112, what I'm going to do instead is I'm going to sell put options. So I'm going to go to, I have no idea why this is Macha. I'm not sure what language this is. Don't mind this. This is currently in Polish as I'm in Poland at the moment, traveled here. But what I'm going to do is I'm going to pick an expiration date that's a little bit into the future. Nothing too crazy, but it has to be in the future because I want to capture in earnings. Let me explain you two things right now. If I were to go for an option that expires on the 2nd of May, then this is not going to capture earnings. If it does not capture in earnings, well, you can see here that, the price for a $100 put option is actually, it would help if I went to sell put instead of buy call. But yeah, as you can see here, sell put, if I go down to 100, you can see here that it's going for $73. Okay, $73 is how much it's going for. But if I, go in for something like the 16th of May, right, 20 days out, the traditional expiration, the third Friday of every month, and now because this captures in earnings, look at that fat stack of cash. Instead of 73 bucks, right? 73 bucks is maybe a really nice lunch. You now get a 4-course or 8-course dinner for two. Now it's looking juicy. It's looking like some steak, some potatoes, some sushi. I don't know, whatever you can think of. This is amazing right here. You see? And the reason why this is so high and very genius. This is next level stuff. Because why would you buy for 112 when you can buy for 100 and get paid 4.65% essentially, because this is a $100 stock, right? So this is going to be 4.65%. And actually, it's going to be even more because if you think about it, when you collect premium, then you actually reduce your total capital that you're putting up. That's why you'll see right here, it's $465 that you're collecting, but it's not really $10,000. It's $10,000 minus the capital that you collect. Now, check this out. Very important. A lot of people might be thinking right now, the max loss is $9,500. Are you freaking out of your mind? Henry, why would I collect $465 and risk that much? Well, it's because you're not really risking that much. This amount of risk right here, the 9,500, the reason why it's so high is because, well, Robinhood, whatever brokerage you have, it's assuming that the stock can go to zero, which is technically true. It can go to zero, but the chances of it going to zero are the chances of your dog being the same name as my dog and your neighbor's dog being the same name, and basically everyone in the neighborhood has a dog with the same name. It's probably not going to happen, right? 50 people to have the same name in the same neighborhood, probably not going to happen, right? So the max loss here is not really even relevant, okay? So you don't have to pay attention to this. This is the capital that you have to put up, but really the risk is if Palantir goes below $95 per share. But check it out. If you're happy to buy Palantir now because it's a great stock, right? I'm bullish on it. If you're happy to buy here, why wouldn't you be happy to buy here or here? Or here, or 95. It's just no brainer, no brainer at all. So if you sell a put for the 100 strike price going into earnings, yeah, earnings are risky, but it's riskier for the stockholder and it's less risky for the option investor. This is exactly what I teach in my Discord community. This is exactly what I'm doing. I'm selling puts going into earnings and I'm picking strike prices that make sense, that have good support levels. By the way, you're always welcome to join that. It's the first link in the description. Now check it out. I want to break down this option here. So 465, 495, this is the bid-ask spread. The tighter the bid-ask spread, the better. It's just way better because every time you trade, I know you might be thinking Robinhood's free. It's free. No, it's not free. There's nothing free in life, okay? So what is actually happening is that there's a bid-ask spread, and that's basically what the market maker is making money off of on Wall Street. So I was actually working on the New York Stock Exchange, and this is what market makers do. They provide liquidity. So you want high liquidity because high liquidity typically means there's a smaller and tighter bid-ask spread, and more liquidity means you can get in and out of the option easily. And you just want to look at volume. You want to look at volume. You want to look at bid-ask spread. The tighter this is, the better, because then you're not wasting money. And every time you trade, you are spending money. Even if you have no commissions from the brokerage, there's still cost from the bid and ask spread. Now check this out. The implied volatility is 100. This is so high. This is exactly what makes the option juicy. The reason why it's so good, the reason why you have a fat stack of cash on the table, and instead of bringing home milk and bread, you brought home steak, shrimp, and lobster, is because the implied volatility is high. There is higher risk. The market thinks that over the next 30 days, there's going to be higher risk, and that's why the implied volatility is higher. That's how it works. So delta here is 0.26, which, to be completely honest, is pretty low. you're getting paid a lot of money, super high implied volatility, really good volume. The bid ask spread could be better. Not gonna lie, it's not ideal. But I'm also the market's closed. I'm filming this on the weekend. So Monday, this could be a lot better. So Monday, 9:30 a.m., Eastern time. You might want to jump in and sell a put option. Not financial advice. I'm just the guy on the internet who has turned a couple $1,000s into 3.5 million. It was 4.5 million, but still, I'm pretty happy. 2K into 3.5 million. You can look at, my past history. It's all here on YouTube. So yeah, been killing it. And Palantir since IPO. I believed in Alex Karp. The man went to my high school, so I kind of got into the stock because I'm like, oh, he went to my high school. That's cool. But then I researched what the stock does, and I'm like, holy moly, this is exactly what I studied. I'm bullish as heck. So yeah, Palantir, sell puts. May 16 looks like a really good expiration date. But again, look, maybe you don't want to have earnings. Maybe you're a bit afraid to take assignment, or let's just say for risk management purposes that you already have a lot of Palantir and then you don't want to exceed my recommended asset allocation, which again I cover all that in my coaching program, what the asset allocation should look like, but it shouldn't be rocket science to anyone. It depends by the situation, but you probably don't want to have more than 20% of your money in Palantir. Now, what's really cool and why I'm also really bullish on Palantir is that Foundry takes slow traditional companies. Like think about manufacturing, pharma, airlines, like companies that they do essential needs in the economy, but they're not really innovating. Well, what Foundry does is they instantly make them data driven. You know how important data is for pharma, for airlines, for manufacturing? If manufacturing can be more efficient, that saves time and money. And long story short, you get it. Instead of spending years building data pipelines and AI models, just plug and play. So of course companies are going to continue to adopt Palantir. It's the most obvious choice to making better decisions. That's also why big companies love Palantir. It's faster and cheaper than building their own AI system from scratch. Like companies don't even have the expertise to do that. It's not that easy to hire some of the best AI engineers and to build an internal software. They're going to make tons of mistakes and it's going to cost not just lots of money, it's also going to cost lots of time. So instead, Palantir solves the solution. And everyone's talking about ChatGPT and open models and AI integration, and that's exactly what Palantir is doing. Palantir already has a product. They've already productized. They've deployed AI platforms, like AIP, Artificial Intelligence Platform. AIP can plug into a client's private data, apply large language models, LLMs, the same stuff that we've seen with ChatGPT, with DeepSeek. What is really transforming 2025, the biggest thing, LLMs, large language models. So this makes Palantir perfectly positioned to sell real AI tools while most other companies are begging for the solution. And what's also really cool is that Palantir has a network effect. So once Palantir gets into a company, it's sticky. It's sticky it's not even sticky like honey. It's not even sticky like gum. It's sticky like glue. It's literally sticky like glue. Like once you're in, you're in. That's it. You can't it's like super glue. It is so sticky. And they become the center of operations. They become the center of supply chain, finance, sales, logistics. And these are all core principles, core functions of a business. A business cannot even operate without sales. No sales, no money. No good logistics, no customers are happy. They don't get no products on time. Supply chain, well, you have to source your product somewhere, right? So clients build more and more inside a Foundry over time, and really switching out becomes pretty much impossible. They're stuck like glue because they've built, they're dependent, and it's like they can't go anywhere. So think of it like Salesforce and CRM or Microsoft and Office software. They're basically essential. So now I want to talk a little bit about government side, which is that most Palantir government contracts are multi-year contracts. They are 3 to 5 years, probably decades long, because once deployed, it's very, very painful for agencies to rip out Palantir and retrain everyone on something new because they don't even know what they're trading on. Like they don't know. They don't understand how to rip out Palantir. They just can't. From top down, they can't. The top level management doesn't know how to build it. The bottom level, workers, they're just not going to be retrained. They're used to it. They've been using it for 3 to 5 years. It's going to be very costly, very time inefficient. So if you think about a contract like U.S. Army awarded Palantir, an $823 million contract for battlefield intelligence, I mean that's probably going to continue. And they've also recently won multi-$100 million renewals just for AI modeling for defense. So it's a very cash flow stable business. And I honestly think that they're going to be moving up the contract ladder even more. So like early on, Palantir got small subcontractors, like, a subcontractor to a prime contractor. Think about like Raytheon or Lockheed. And now Palantir is winning prime contracts themselves. Like they're going to win every contract. And I'm a little bit familiar with this because I used to work actually at IBM. I really never mentioned this in my videos because it's not really. I was in consulting, more in like tech consulting, which was an interesting job, and I did learn a lot. And it's actually interesting because a lot of companies that are doing consulting, they have a RIP process, which is like request for proposal. Sorry, RFP process. So when they do like a request for proposal, they're essentially saying, well, hey, we want to propose to you a solution. We want to work with you, and aka give me your money. We want to help. Palantir is able to do that now themselves, like all the time. They're able to win contract after the contract, and it's only going to get easier because reputation, pretty obvious. So they're building government specific AI tools, and Palantir is pushing AIP specifically for government, which is a version of their AI tools built specifically for military operations, mission simulations, logistic optimization, real time battlefield AI. And I don't really see this going anywhere. So that's why I'm really comfortable going ahead and selling $100 put options. And basically, what this means is I'm happy to buy it at 100. I'm trying to load up the boat. And if I look at my track record, I think Palantir is basically my best pick. Palantir has been my most solid choice. I'm happy I still have it in my portfolio. I'm happy I haven't really touched it too much. And I'm just excited to continue to hold Palantir and continue to generate income with option selling, with selling more put options to acquire more shares of Palantir. That's my strategy this week. If you're interested in more Palantir content, more breakdowns of Palantir stock from the OG himself, who has been in the stock since IPO, all I ask is you hit that juicy subscribe button